Hello traders, Dale Pinkert, Twitter handle at Forex Stop Hunter. We have the beginning of spring this Wednesday. W. Gann talked about at times when seasons end and new ones begin, markets going in the direction that they currently have been going into this time frame, this being the spring equinox, can reverse course, starting off with Kiwi Yen dailies today. So looking at this still looks like a potential failing rally to me. Any pullback could at least correct back down towards 75 before we take out highs at 79. And if we get some risk off, we could take out this 75 level in Kiwi Yen. It could turn out to be much more significant to the downside. So this could be a good risk off play. Looking at this and Aussie Yen, potentially the Kiwi begins to even become weaker than Aussie if we get some type of bottom in Aussie Kiwi. So looking at this as being a shorting opportunity, remember we have the Fed Wednesday. It's been said the Fed is not data dependent. They're S&P dependent, so the possibility does exist that everyone looking for a dovish statement on the Fed doesn't get one. The next market I want to cover is the Russell. Looks to me like a foreshadowing of what happened last year when the Russell peaked before the rest of the general market. As you can see from this daily chart, last week's recovery did not take out the highs of the prior week like the S&Ps did and the Nasdaq did by a long shot, with tech leading the way. So could this be a harbinger of potential corrective activity in the stock market, way overdue? Could it be triggered by the Fed into the solstice? I'm thinking yes, and looking for a turn in the market, with Russell most likely, as it's a weaker, leading the way to the downside like it did early last year. And with the Fed coming up, I thought it'd be good to go to take a look at the Nikkei. And one thing about the Nikkei, people have to say, well, where did QE come from? Well, the Japanese had their bubble pop in 1989, and the BOJ has been involved in one form of quantitative easing or another since that time. Still there, stuck in it. Is that a bit of a foreshadowing of what's going to happen to the rest of the global economy? QE forever. My point being with the Nikkei here that although the Nasdaq may not make new lows, S&Ps maybe not make new lows, just correct, maybe a fib retrace of what we had to the upside, maybe halfway back, 61.8. Nikkei has the potential to wash out and take out the lows from late last year. So remember, it's a binary bet on the Fed. It's black or red. It's roulette. It's not trading. And don't predict the reaction, react to it. This is Dale Pinkert reminding you not just to count your pips, count your blessings, and be back with you tomorrow. Good hunting.